You know what they say about death and taxes, right? They're both certain, but at least death doesn't get worse every time Congress meets. Ah, taxes. A subject as vast and mysterious as the universe itself. And just like the universe, it's filled with black holes, supernovas, and things that make you scratch your head in wonder. Or perhaps more aptly, in confusion. But fear not, dear listeners, for we are here to navigate this cosmic labyrinth together. Our journey today will take us through the intricate maze of the tax system, exploring the clever and sometimes surprising ways the well-off navigate its complex corridors. From tax havens to trust funds, from capital gains to charitable donations, we will uncover the secrets of savvy tax strategies. So buckle up, because this ride might get a little bumpy. But let's not forget, understanding the tax system isn't just for the rich and famous. It's crucial for anyone interested in personal finance. Remember, folks, understanding taxes is the first step to not letting them tax your sanity. Starting with number 10, we dive into the wonderful world of tax havens. These are countries or jurisdictions with extremely low taxes or none at all. These tropical paradises are not just for sunbathing and sipping margaritas, they are also hot spots for the wealthy to park their money. Now let's talk about offshore accounts. These are bank accounts located outside one's home country. The rich often use these accounts in tax havens to save on taxes. How, you ask? Well, they simply transfer their money into these accounts and voila, the money is out of their home country's tax jurisdiction. But it's not all sunshine and tax-free rainbows. There are legal considerations and potential reputational risks, not to mention the constant cat-and-mouse game with tax authorities. So if you're thinking about moving, consider the Cayman Islands. But remember, it's not just about the lovely beaches, but also the delightful lack of taxes. Coming in at number 9, trust funds, the family gift that keeps on giving. Now don't be fooled by the name. A trust fund isn't just a giant piggy bank for the offspring of the wealthy. It's a strategic tool the rich utilize to navigate the tax system. Imagine a trust fund as a legal agreement where the wealthy person, the grantor, transfers assets into a trust, managed by a third party, the trustee. The trustee then distributes these assets to the beneficiaries, who are often the grantor's family members. This way, the rich can minimize estate and inheritance taxes. Instead of leaving a large fortune that would be heavily taxed upon their demise, they transfer their wealth into a trust fund during their lifetime. The assets in the trust fund are not subject to estate taxes and can be distributed to beneficiaries with little to no tax implications. Who knew trust could be so profitable? At number 8, we have capital gains. It's like winning the lottery, but for your investments. Capital gains, the darling of the rich and savvy investors. When an investment increases in value, that increase is referred to as a capital gain. But here's the kicker. You don't pay taxes on it until you sell and realize the gain. Pretty neat, right? But there's more. Capital gains are taxed at a lower rate than regular income. So if you're earning your wealth through smart investments rather than a 9-to-5 grind, you could be paying less in taxes. This is one of the ways the wealthy keep more of their money. Suppose you bought a stock for $100 and sold it for $200. That's a $100 capital gain. Now, instead of being taxed at your usual rate, you're taxed at the capital gains rate, which is often lower. Remember, it's not about how much you make, but how you make it. Lucky number 7 brings us to real estate investments. Who said Monopoly is just a board game? In the real world, real estate investments can offer some impressive tax advantages. Let's unpack this. When you invest in real estate, you're stepping into a world where depreciation is actually a good word. You see, the IRS allows property owners to write off the cost of buying and improving a property over its useful life. This isn't a loss you're taking, it's a strategic reduction in taxable income. Not to mention, when you sell your real estate for a profit, you're looking at long-term capital gains. These are typically taxed at lower rates than ordinary income. It's like getting a discount on your success. And let's not forget about the mortgage interest deduction. This little gem allows you to deduct the interest paid on your mortgage from your taxable income. So next time, instead of buying a car, consider a condo. Halfway through our list at number 6, we find tax deductions. It's like a sale, but for your taxes. Now, what exactly are tax deductions? Picture this. You're shopping for a new outfit. You find a jacket you love, but it's a little out of your price range. Just as you're about to put it back, you see it's on sale, 20% off. Suddenly, it's within your budget. That's sort of how tax deductions work. They lower the amount of your income that's subject to tax, effectively reducing your tax bill. The wealthy, with their battalions of accountants and tax attorneys, are particularly adept at finding and maximizing these deductions. They might deduct mortgage interest on a second home or the depreciation on a business vehicle. Even the cost of tax advice itself can be deducted. Remember, every little bit counts, especially when it comes to taxes. So don't forget to look into tax deductions that may be available to you. At number 5, we have charitable donations. Giving never felt so good. Now let's get into the nitty-gritty of how charitable donations can provide significant tax deductions. You see, when the well-off feel benevolent and donate to registered charities, they're not just helping out a good cause, they're also reducing their taxable income. For every dollar given, a portion can be deducted from their taxes. It's like a win-win, right? Let's look at it this way. Imagine you're a high-income earner, and you're in the top tax bracket. If you donate a significant amount to charity, you could potentially drop into a lower tax bracket, reducing the overall percentage of your income that goes to taxes. Of course, this isn't to suggest that charitable donations should only be viewed as a tax strategy. The main aim should always be to support causes you genuinely believe in. But hey, if you can do good and save on taxes simultaneously, why not? So be generous, folks, it might just pay off. Coming in at number 4, we have retirement funds. Because who wants to pay taxes in their golden years? Let's talk about how maximizing your contributions to retirement funds can save you a considerable amount on taxes. Think of it as a double-edged sword. On one hand, you're saving for a future where work is optional, and on the other, you're reducing your taxable income. A win-win situation. Now, the trick here is to take full advantage of the contribution limits. The more you put in, the more you save on taxes. And the beauty of it is, these contributions aren't taxed until you start withdrawing in retirement. That means your money grows tax-free for years, even decades. And here's the cherry on top. Some employers will match your contributions. That's free money, folks. So don't leave it on the table. Maximize your contributions, minimize your taxes. So start planning for those beach days now. Your future self will thank you. Scene script. Cracking the top 3, we have business expenses. It's not personal, it's business. Now let's talk about business expenses, a favorite tool of the wealthy for navigating tax systems. When we say business expenses, we're referring to costs incurred in the course of running a business. These could be anything from office supplies to travel costs for business trips. Here's the trick. The rich often own businesses, and they make use of these business expenses to reduce their taxable income. By strategically spending on their businesses, they can lower the amount of money that's subject to tax. Picture this. If you earn $1 million, but spend $500,000 on business-related expenses, you're only taxed on the remaining $500,000. It's like having a magic wand that makes half your income disappear from the taxman's sight. But remember, it's not about reckless spending. It's about strategic, necessary expenses that contribute to the growth and success of your business. Remember, a smart business person knows how to spend money to save money. At number 2, we have tax shelters. It's like a cozy cabin, but for your money. Now, what exactly is a tax shelter? Simply put, it's a legal method of reducing taxable income, resulting in lower tax payments. Imagine it as a protective shield that keeps your hard-earned money safe from the clutches of tax authorities. How do the affluent use tax shelters, you ask? Well, they often invest their money into certain ventures like real estate properties or retirement accounts. These investments not only grow their wealth over time, but also allow them to deduct the amount invested from their taxable income. It's a win-win situation, really, more money growing and less money taxed. Another popular form of tax shelters is setting up trusts. These trusts can be structured in a way to reduce income taxes, while still providing financial control over the assets. So if you're looking for a safe place for your money, consider a tax shelter. And finally, at number 1, we have income splitting, because sharing is caring. Income splitting, in its simplest form, is a way to distribute income among family members, reducing the overall tax rate. Let's imagine a scenario. You're a high-income earner, sitting pretty in the top tax bracket. But instead of keeping all that money under your name, you decide to split your income with your spouse, who's in a lower tax bracket. Suddenly, instead of being taxed at the highest rate for all your income, a portion of it is now being taxed at a significantly lower rate. So, you're not just sharing your income, you're sharing your tax burden too. This method is a favorite among the affluent, as it allows for substantial tax savings. However, it's crucial to remember that tax laws vary widely, and what's permissible in one jurisdiction may not be in another. So next time, think twice before saying, "What's mine is mine." And there you have it, folks. The top 10 ways the rich navigate the tax system. We've journeyed through the labyrinth of tax havens, trust funds, capital gains, and real estate investments. We've delved into the world of tax deductions, charitable donations, retirement funds, business expenses, tax shelters, and income splitting. These aren't just strategies for the wealthy. They're tools available to anyone willing to learn and apply them. They are stepping stones to financial freedom, allowing you to keep more of your hard-earned money and invest it wisely. Understanding the tax system isn't just about saving money. It's about making money work for you. It's about taking control of your financial future and creating the life you want. You don't have to be rich to navigate the tax system like the rich. You just have to be informed. Don't forget to like, comment, and subscribe for more financial wisdom. Remember, in the world of taxes, knowledge is power.